Hello, ladies and gentlemen. This is Greg Michalowski from ForexLive.com. I'm going to take a look at the dollar versus Swiss as we head into the new trading week. What levels will be in play? What would turn the bias from maybe more bullish to more bearish? Let's take a look at the currency pair. Focus on the hourly chart because the dollar versus Swiss has been trading in a very up and down fashion, and really if you look at the daily chart, we're not near the high prices that we saw in the month of May or June. So let's focus more on the shorter term and what the chart is telling us from a technical perspective, and what would turn the bias either more bullish or more bearish. Right now, where we are right now, we closed the day near the 0.9872 level. And that took the price above the 100-hour moving average, which is currently at 0.98457. It's also above the 200-hour moving average, which is 0.9796. Now, I want to focus on both the 100-hour moving average and this swing area through here. This swing area has a number of swing highs through here, here, a swing low here, a swing low right here. We tried to hold support here, but then fell below the level here, and then found sellers through here, swing high here. And as you can see in late trading on Friday, we were able to get above not only the 100-hour moving average, but move more into this swing area and really close near the high extreme. That high extreme and the 100-hour moving average will be our close support levels for this currency pair going into the new trading week. If the price can stay above this level, we have the potential to move further to the upside with 99.23 level, and then the double highs through here that we saw on Monday and Wednesday right here, coming in at 99.647. And then we're going to look toward the parity level on the top side. Those are the levels that we would look for on the dollar versus Swiss to the upside, as long as the price can remain above the 100-hour moving average and extend above this yellow area through here. Now on the downside, if we break below the 100-hour moving average, it doesn't necessarily tilt all the bias fully to the downside, but there is a tilt to the downside for the currency pair, and we look toward the rising 200-hour moving average. Note here on for Thursday's trade, the price fell below that level, and the bias turned more to the downside. We tried to come up to it and find sellers through here, but then broke above it, traded above and below it in the Friday trade. Remember, Friday was month end, quarter end, so there was some volatility, but we ultimately moved to the upside and moving up to our high price. So getting below the 200-hour moving average, getting below the 38.2% retracement of this move to the upside, and then getting below this trend line right here. This trend line connects a low to a low, and in trading on Friday, the low prices through here got within a few pips of that trend line before rotating to the upside on two separate occasions, moving and basing against that level and moving to the upside. So those would be the targets on the downside to get to and through to increase the bearish bias and tilt the bias more to the downside here for the dollar versus Swiss. Again, reminding you that we have seen sharp moves to the downside through here and upside right here. So although we're near the high right here, we could see a rotation back to the downside just as easily. We can see further move to the upside here in the dollar versus Swiss. So be aware, be prepared. But certainly the buyers and the dollar buyers are still in control for this currency pair. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.